Welcome back to Rekt Radio, the one and only show where we watch one asset soar, another one stumble, and declare that everything is going exactly according to plan. I'm Sunny, and folks, the market is finally starting to reward the strong and punish the weak. It's a beautiful sight.
And I'm Cole, here to remind you that the market isn't a wise, discerning judge. It's a hyperactive toddler chasing after shiny objects. Today's favorite toy could be tomorrow's forgotten garbage. Let's not start handing out trophies just yet.
You can't deny what's happening, Cole. Look at Ethereum. While the rest of the market, including the big king Bitcoin, has been sluggish and chopping sideways, Ether is showing incredible strength. It's completely defying the slump. This isn't just a random pump. This is a fundamental decoupling. The student is finally leaving the master in the dust.
A decoupling? Sonny, that's a very strong word for a few green candles. Let's not get ahead of ourselves. What are the risks right now? The risk is that this is just a temporary rotation, a bit of capital sloshing from one big cap asset to another in a boring market. It's not a revolution, it's just traders getting bored. And when Bitcoin finally decides to make a real move, down or up, you can bet your bottom dollar Ether will snap right back into formation. It's still tethered to Bitcoin's gravity.
Not anymore. The tether is fraying. What could this become? This is the market waking up to the simple fact that Ethereum has its own powerful narratives now, completely independent of Bitcoin. We have the massive tailwind of the spot ETFs finally getting approved and ready to launch. We have a deflationary supply, where more ETH is being burned than created. It's a productive, yield-bearing asset with a sprawling ecosystem of applications being built on it. Bitcoin is a fantastic store of value, but Ethereum is a decentralized global computer. The market is finally starting to price that in. Analysts aren't just dreaming about this. They see a clear path to $5,000.
Analysts also saw a path to $1 million Bitcoin by 2020. Their crystal balls are notoriously cloudy. You see a powerful narrative, I see a single point of failure. The entire bull case you just laid out hinges on one thing: the successful launch and uptake of these ETFs. If the inflows are a disappointment, like they were initially for the Bitcoin ETFs in other regions, this whole narrative deflates overnight. The entire price structure is built on a future promise, and if that promise underwhelms, the fall will be twice as fast as the climb, because it's pure hope propping it up.
But it's not just hope, it's institutional validation. The biggest financial players in the world are about to offer Ethereum to their clients. This isn't a retail-driven meme rally. It's the beginning of a systematic repricing of Ethereum as a core institutional asset. This is the moment we've been waiting for. It's not justifying a slump. It's laying the groundwork to challenge for the top spot. The flippening is back on the menu, Cole.
And while you're focused on that, let's look at another top-tier asset that's not having such a great time. Let's talk about BNB. It charged up to test its all-time high, kissed it, and then got aggressively rejected, retreating back towards $800. That, to me, is a much more telling story about the state of this market. When a major asset fails at the most important resistance level, it tells you the bulls do not have the strength they think they do.
I see that completely differently. The fact that BNB, the token of the largest exchange ecosystem in the world, could even retest its all-time high after all the regulatory FUD and market chaos is a testament to its incredible resilience and the power of the BNB chain. It's a sign of immense strength. This retreat isn't a failure. It's a healthy consolidation before the next attempt to break through into clear blue skies. What could this become? A permanent fixture in the top 3, a blue-chip asset that has weathered every storm thrown at it.
It weathered the storm by being a centralized entity that can pull levers behind the scenes. What are the risks right now? The risk is that the ceiling is real. The all-time high represents the peak of market euphoria, and failing to break it is a powerful psychological signal. It tells traders that there isn't enough new money or new belief to push it into a new price regime. It's the market saying, this is as good as it gets, folks. Time to take profit. This isn't a launch pad, it's a brick wall. And all that talk of resilience ignores the giant elephant in the room. It's all tied to one company that remains in the crosshairs of global regulators. That's a fundamental risk that Ethereum, for all its faults, doesn't have in the same way.
You're comparing apples and oranges. BNB's value is tied to its utility within a massive, functioning economic ecosystem. People use it for everything from launch pads to transaction fees on a chain that is actually fast and affordable. Its strength comes from its utility, not from a future ETF promise. The retreat from the high is just short-term profit-taking. The long-term trend is undeniable. It's a story of growth and adoption.
It's a story of centralization and regulatory risk. The failure at the all-time high is a symptom of that risk. The smart money knows that the upside is capped as long as that regulatory sword of Damocles is hanging over Binance's head. That's a fundamental risk that Ethereum, for all its faults, doesn't have in the same way.
You're comparing apples and oranges. BNB's value is tied to its utility within a massive, functioning economic ecosystem. People use it for everything from launch pads to transaction fees on a chain that is actually fast and affordable. Its strength comes from its utility, not from a future ETF promise. The retreat from the high is just short-term profit-taking. The long-term trend is undeniable. It's a story of growth and adoption.
It's a story of centralization and regulatory risk. The failure at the all-time high is a symptom of that risk. The smart money knows that the upside is capped as long as that regulatory sword of Damocles is hanging over Binance's head. You see strength, I see a warning sign for the entire market. If an asset with that much backing can't break its ceiling, what makes you think others can?
Because the king, Bitcoin, sets the ultimate trend. And while it's been quiet, the underlying picture tells a very, very different story. Let's pull up the technicals from TradingView and see what's really going on.
Ah, yes. After debating the merits of two altcoins, let's consult the ancient runes to see what fate awaits us all. Please, Sonny, decipher the magic chart for us.
It's not magic, it's data, and the data is painting a picture of profound underlying strength. If you look at the one-day chart for Bitcoin, the overall summary from the analysts at TradingView is a solid buy. But that's not the exciting part.
I'm on the edge of my seat.
Look at the oscillators, the things you always point to, the tools that measure short-term momentum and sentiment. They're sitting on neutral. The market has no manic energy. It's calm. It's not overbought. But then you look at the moving averages, the indicators that track the deep, powerful, foundational trend of the market. Cole, they are flashing a strong buy.
So let me get this straight. The indicators that tell you what's happening right now are saying, we've got nothing. The engine has stalled. There's no momentum. But the indicators that tell you what was happening weeks and months ago are still positive. You're trying to drive a car by looking in the rearview mirror while the engine is off. This is the definition of a bull trap.
No, this is the definition of a perfect bull market setup. What could this become? Think about it. A confirmed strong buy on the underlying long-term trend shows you that the smart money, the high conviction holders, are rock solid. They are not selling. The foundation is made of granite. At the same time, the neutral oscillators show that the short-term speculative frenzy has completely cooled off. The tourists have gone home. This isn't a stall, it's a pit stop. It's a market that is consolidating its power on top of a powerful uptrend, getting ready for the next explosive move. It's a coiled spring on a rocket ship.
What are the risks right now? The risk is that the neutral oscillators are the lead indicator and the lagging moving averages haven't caught up to the new reality yet. The reality is that the buying pressure is gone. The conviction has evaporated in the present moment. That strong buy signal is a memory of a trend that is now failing. This divergence is a classic warning sign. The market is holding at a high altitude, but the engines have flamed out. And the neutral reading means there's no immediate thrust to push it higher. It's coasting on fumes, and gravity is a very powerful force, Sonny. This isn't a launch pad, it's a precipice.
That's all for this episode of Rekt Radio. I see an ecosystem where the best technology is finally being rewarded, where institutional money is flooding in, and where the fundamental asset of the entire space is quietly building strength for a massive surge. Stay bullish and trust the trend.
And I see a market full of false signals, where a short-term pump is mistaken for a paradigm shift, and where a failure at a key resistance level is ignored. The charts are screaming exhaustion, not strength. Don't get caught looking at the past when the present is telling you to be cautious. You've been listening to Rekt Radio.